Thanks, Vinnie. Thanks for having me on board today. I'm real excited. Just last 2 weeks ago, we published the 18th annual Professional Services Maturity Benchmark. Now, a lot of people I speak with understand it pretty well, but again, for your audience, maybe they haven't heard of it. So I'd like to briefly discuss it. We
David,
believe
thank you. I know we've talked about you coming on this show several years in a row. So instead of the 15th, we're getting to see the 18th. But thank you very much for making the time.
Yeah. Just wait till the 20th, Vinny. Um, it's and so every professional services firm, and you can think of this in a lot of different industries as well, but every professional services firm is made up of what we call five pillars. Leadership, which is the people who set your strategy, who lead, who instill confidence in the workforce, and prepare you to go out there and win. Second is client relationships. That's your sales, your marketing, your partner relations. That's how you win business and move forward. The third pillar is talent. Talent is your people. Most important pillar, the highest cost in professional services. And so, who do you hire at what price, at what skill set? Are they leaving the firm voluntarily or involuntarily? Is a good question. The fourth pillar is what we call service execution. That's delivering services. That's where you make money in the professional services market. And then finally, finance and operations, and that's counting the beans, making sure you can make payroll, looking at margins, and hopefully achieving a solid level of profit in your organization.
So
And
Dave,
so
I spent, I don't know, 12 or 13 years with Pricewaterhouse. So, a lot of this is I was I was more delivery, but I understand all this. The fourth pillar, is that like the back office recruiting? And when you say service execution, what is that?
service execution is projects.
Oh,
It's staffing projects, delivering projects, maintaining high levels of billable utilization, achieving on time, on budget, and achieving the correct margin. You go out for a 40% margin. Ideally, you hit at least 40% in these services. And again, it's hard to do, but a lot of firms do it. So it's really project management 101. And I'm not going to talk about it today, but each of these five pillars really has a business solution they use to run their business. Strategy might be a planning solution, an adaptive insights or something like that. Client relationships or customer relation, you think of Salesforce first and foremost. Talent is your people. What kind of HCM system do you use to run your business? Service execution is what we call professional services automation, a market I've covered for 27 years now. I know it quite intimately. And then finance and operations, that's your accounting solution. They use. And so, a lot of companies sell all five of these. Some companies are best of breed that don't. So, and again, that comes into play, but not in the webinar today. What I would say is that then we have five levels of performance, just like the capability maturity model. Level one is people working really hard, but the processes aren't aligned. They're just trying to sell and deliver. And three people may be doing the same thing at the same time, so they're not efficient at what they do. As they build processes, as people have more structured roles within the organization, they build in maturity and they're much more successful. Ideally, they hit at least level four, which about 15% of the organizations hit. And that's when they're really running excellent. They're making a lot of money, they're growing fast, their people are happy, their clients are happy, everything's going well. And then that last thing, level five, only 5% hit it every year. And those are the people that are ahead of the curve. They're playing checkers when everybody else or they're playing chess when everybody else is playing checkers. They're thinking 5 years in advance because they're running so well. And
so
so, again, it's not easy to do.
Dave, in the 18 years you've run this survey, has anyone been a level five all the time?
No one achieves it every year. We've had a few that were really good. I remember 10 years ago, come to think of it, because my son was in high school. 10 years ago, we had a firm that was level five in everything one year, and the next year they were at level two in
Whoa,
everything.
whoa,
That doesn't happen. My partner and I were over in New Zealand, and we met with the firm for several days. And I hate to say it, it had to do with a change in their information strategy, and they weren't able to get the information in real time to know what they were doing. And
wow,
so they struggled. They struggled. And don't worry, I had a long talk with that company, or the company that that they sold them the solution, because it was terrible. I'd never seen that happen before. It takes about a year to go up one level per pillar, unless you're really good. Going from one to two in client relationships would be great for you. So it's just not easy. It's not easy. And so
did that firm ever bounce back?
what now?
Did that firm bounce back?
They did a little, but they sure, we stopped serving them 2 years later, and they were at level two and or three in most things, but they never, as far as I know, they never recouped. They stopped, submitting to the survey, and that's fine too. Um, so again, the model is one thing. It's a framework for your organization to improve. And why that's important is demonstrated on this slide. And I told you that this is the one that's copied the most for some reason. And it really hits to the point that you're all connected. If you work for a professional services firm, the leadership sets strategy, instills confidence in the employees, sets that vision for them. With that, they just determine what sale or what services to sell, how much to sell them for, and they go to market. With that information, then HR knows who to hire. Do I hire low-level consultants because we don't charge much? Do I hire higher level consultants because we charge a lot? It just depends. So again, it's all related. Once you have the people, then you deliver. You deliver the services. Ideally, you want to be on time, you want to be on budget, and you want to drive quality so that you have satisfied clients, because satisfied clients turns into more sales, but it turns into growth, but it also helps you improve project margins and overall profitability.
So yellow is a customer, I presume is a client facing.
Yes, yellow is what we call client relationships. I stick with these colors so that people looking at it could say, okay, I'm in charge of delivering services. My gears are red. But the
Right.
point is everything's connected. So, I gave you a framework. I told you why it's important, and most people can understand that and agree with it, but so what? So what? Well, here's the so what. We track about 160 key performance indicators every year. And here are the results of just, what is it, eight or nine of them. Okay, you can see, and I tell most executives look at that bottom row and see the difference in profitability. Remember, 30% of those firms we surveyed are level one. They averaged about 2.7% profit. That's wonderful if you're in a manufacturing firm. That's terrible if you're in professional services, okay? You can see as these firms mature, they do things better, more efficiently, they grow faster, higher levels of utilization, higher levels of on time delivery, and maybe most important to most PSOs, professional services organizations, is project margin, which is how you make money to spend on growing your firm, hiring new people, doing whatever, or just paying people more money, and profitability, overall profitability. And so our model tries to take every firm that we survey and put them in buckets for each of these. And then we hand out the results. Well, we do scorecards for firms for money. And we say, look at these numbers, compare your organization. Where is your organization on these really important KPIs? And that'll tell you kind of where you need to start. And our report that we publish annually has every KPI in it for every industry we cover, so that you can see if you're interested in how did we do. Billable utilization last year for our firm was 65%. How does that compare to the survey average for, architects and engineers or for management consultancies? It doesn't really matter.
So you said 30% were level one. Well, how many end up in level five?
So the way the model, think of it this way, Vinny, the way the model is built, we take every pillar, let's just say the client relationships pillar, which is here, and we stack the total score up for each question or each pillar. So in client relations, the scores can go from 0 to 100. Okay, we've normalized them. The lowest score is maybe 10 on a scale of 1 to 100. The highest score is probably 70. Again, nobody does everything perfectly, okay? There's always room for improvement. So we take those scores 10, 10.5, 11, 11.5, 12, 13.6, and we build a mountain out of it. And then we take the bottom 30% every year and say you're level one. Because remember, Vinny, 1 year 10% growth is good. 1 year 10% growth is not. I tell everybody, think of this as a game of golf. Last year you shot 11 below and you won your club tournament. This year you shot 11 below and you came in 30th place. Well, why? You did the same thing. Well, that's because 29 firms did better than you. So every year the numbers change. We take the bottom 30% for level one, the next 25% level two, then 25% level three, 15% level four, and that top 5% of the firms we survey get level five. And obviously, statistically speaking, with the 21 firms, the numbers can be all over the place. But as you can see, these firms really did well. 20% profit. They could be anywhere from 15 to 40. I mean, depending on the type of organization surveyed. All right.
You don't try to fit, you don't, you take you don't have a predetermined bell curve. You look at the numbers and like you say, it
Yeah,
depends.
Vinny, because they do change every
Competition
year.
decides that. Yeah.
Yeah, they do change every year. And again, this year sales was terrible. Sales were terrible. Last year maybe level five firms grew at 30%, whereas this year maybe it's 20.
Yeah.
And so again, you don't want to say just because the overall market didn't do well last year doesn't mean your firm didn't do well last year. You did as well or better than everybody else. And so just to highlight a few of the more important trends for people to take a look at when they go through this podcast, you can see what happened. 2020, of course, was the year of COVID. So we all wondered what would happen after COVID. Well, the market jumped. People were excited. Everything growth was good. Every KPI improved for the most part. The problem has been over the past 3 years, you could see a degradation in the KPIs. This market was not doing well last year. The numbers bear that out. You saw growth numbers. Profitability, I don't have on this chart, was the worst that we've seen, I think we've ever seen in 18 years of surveying. Project margin actually went up last year, and honest to goodness, I can't explain why. It just did. And sometimes there are things I can't explain. So again, it's just important that and I'm an optimist. I expect this year because I'm seeing a lot of things happening in the market. People are going all over the place. So I really believe 2025 will be a good year, but we won't know until I survey starting in September. Any questions on this, Vin?
No, no.
And so, again, if you knew me and knew what I did for a living, I throw a lot of numbers at you. And ideally, if you need these slides, I'll be happy to provide them. What the purpose of this was to show you that I do an overall annual benchmark of professional services. the firms change. Some of the firms change every year. And the point of this slide is to show you the difference in professional services markets. Last year, you can't help but notice management consultancies showed a reduction in revenue last year. The only other time I saw this was post COVID for advertising agencies.
Mm.
They were awesome when you couldn't go outside. Once firms could and they could start doing sales another way, the advertising agencies definitely suffered. But they did okay. They did about average this year, according to this. Architecture and engineering firms, again, I think there were a lot of things in place for these organizations. They started building when the economy was good. They got contracts when interest rates were low and inflation was lower. And so we've seen them do very well over the past year. So again,
I like all the different types of firms you have, right? But a number of these, like when I was at Pricewaterhouse, they would always be, our competition is the big five. They would not look, they were very, very tunnel vision, right? Do you find some of that pushback to you and say, why are you comparing us to agencies or McKinsey or?
well, and fortunately for them, we do compare them. So right now, when we give someone a scorecard of them, we compare them to their peer group. So I think there were 60 or 80 management consultancies. So I say, Vinnie, your management consultancy, here's how it compares to all 80 of the consultancies we surveyed.
Okay.
Here's how your firm compares to the top performing agents or management consultancies, because you really want to be like them, or you may already be like them. And then we compare you to the 403 firms overall in the survey. I
Oh,
know it's
gotcha.
not as important, but
Thank you.
again,
Thank you. Because I misheard you earlier. You said 21 firms. So the total was really 400 then.
I'm sorry, say that again.
I think I misheard you because you said earlier 20, a number of 21. What was that?
I'm not sure.
I must have misheard you.
Maybe
So
2021. No, no. Well, again, I don't think I have those numbers on this chart, but again, these are the markets I have the most data for. For
there
instance,
were 400 firms in total across all these
yes,
categories.
400 firms and about 2,500 over the past 5 years. But for instance, legal firms, we get about one survey a year from them. Obviously, I can't, there's no statistical significance. I have at least 20 observations on all of these firms. And so it's the numbers are your growth rate, your profitability, and the average size in terms of employees in the firm. Again, I don't even want to go through this quickly enough. Somebody can take a screenshot, but the point is, these are the same. These are the numbers. So you can see there were 85 management consultancies I surveyed last year. Bad growth, as you can see. So you look and see in red and in green. The red was the worst. The green was the best in these vertical markets. And again, the purpose of this, when I do a normal webinar, is for you to sit back and go, okay, we're an IT consultancy and we had attrition at 15% last year. That's worse than the average. What can we do to keep our people? Things like that. So it's all comparison. The big report, which is 260 pages, has all of this in there and much more. And firms use it every day to compare themselves to to their peer group primarily. And one last trend slide, and I thought this was important. In professional services, we talk about billable utilization. We've always set it up on a 2,000-hour basis. I know consultants work more than 2,000 hours a year, but we try to keep it simple for everyone. And so 2,000, 75% is 1,500 billable hours per year. And executives, whatever your firm uses to track utilization, just be consistent to tell how you're doing. What I thought was interesting here when I was doing the analysis was the correlation between billable utilization and on-time delivery. And so most executives talk about billable utilization. I happen to love on-time delivery again because it's the driver of client satisfaction, which is a driver of employee satisfaction. And so you can see as billable utilization goes down, so does on-time delivery, and therefore it's not good. It's not good. So I'm hoping in 2025 we get back up to, much better levels.
Who decides if it's on time? They tell you this
Yeah,
metric?
they do. They answer the survey. What percentage of your projects are delivered on time, on budget? And we've always had pretty good data out of them. And again, every year, 400 to 700 firms, com, complete the survey. So it's always
So
good.
they normalize whether it's fixed price or time and materials and tell you their definition of on time.
Yeah, yeah, and again, that's a whole nother series of questions of what is the billing methodology, and for years we saw fixed price going up. Then, as the talent shortage has occurred, we've seen fixed price going down because firms can get away with time and materials now. So it's better for them. But I would say the best firms do fixed price because they're just more efficient than everybody else. So instead of that 40% margin, they can make 50% margins because it's all about the pricing and being efficient. Um, I wanted to include a couple slides here about how we look at things and how firms, we call it the impact slides. And for instance, we ask what percentage of your annual revenue target did you achieve last year? And it's important because you've got to continually adjust your planning. Things happen. COVID happened in 2020, and that changed everyone's plan, I hope. Those that didn't change, suffered probably. And so, if obviously, as you achieve higher levels of revenue that you expected, that means your planning worked out, your hiring worked out, your client sales worked out. And you can see the correlation as you achieve your targets. And, look at the last two columns here on time, project delivery. You can see how that improves quite a bit as you achieve higher levels of revenue, of making your revenue, projected revenue, and profitability improves. We also do this with margin, and they're very similar numbers. And margin, that's what you're working for when you deliver services. You're trying to achieve high levels of margin, which turns into profit eventually. So, again, we just want to highlight that the purpose of this is to tell you make a plan, but understand it's fluid, and as conditions, economic conditions, client demands change, you have to change with them. Don't be rigid in terms of this. And then I believe this is the last slide I wanted to present to everybody. Again, we have something we call the plan to profit cycle. Business planning, is so important, and your plans have to be flexible. I just discussed that. You plan, you sell, you hire the resources, then you deliver the services, and then you count the beans. Backlog is one of the most important KPIs in our client relationships pillar. Most firms shoot for at least 50% backlog, meaning at the beginning of the quarter, you already have 50% of the services ready to deliver. Because if you sell a lot of services but you don't initiate them for a year, what are your consultants doing today? So it's real important that that happens. Well, you can see those firms that had higher than 50% backlog, they grew faster, they had higher levels of utilization, bigger projects, on time delivery. Everything looks good, including profitability, which was 43% higher on a relative basis. So again, it's all connected, it's all related. You have to build that backlog to be successful going forward. And that's what
And
we
the
find.
same thing, it's their definition of what they call a backlog, or is that an industry standard definition?
Well, yeah, we actually do publish what a backlog is officially. Again, every firm may be a little different. Every year I get a number of questions on backlog, pipeline, billable utilization. Those tend to be KPIs that firms view differently. I don't really care how they do it. Just be consistent in how you do it. But the whole point of our definition is that at the beginning of a quarter, 4 quarters a year. At the beginning of the quarter, do you have enough work for your consultants to be busy building utilization? Again, we could get into a long discussion about billable utilization, and one of the important roles in it is hiring. If you only need 100 consultants with a skill set and you hire 200 people, that means on average 100 people are going to be sitting on the bench. Your billable utilization has no prayer to succeed. So in the planning process, you are looking at people, you are looking at skills, you are looking at cost. You want to make sure you hire that right mix. And the bottom line is it's really hard to do. I think anyone who's ever done it understands that. You can overwork or underwork employees a little, but if you overwork them, they leave. If you underwork them, they're bored, they leave. And so it's tough to manage that whole process. And selling is just one of the steps involved in successful professional services.
Excellent.
So I think
Is
that's
that it?
all I've got.
Is that it? Okay.
I think so, yeah.
Um, so um, you've done this for 18 years. What has are there two or three things that have significantly changed in the 18 years? Because it seems like firms, I keep thinking they will automate a lot more, and they don't. It's still a very people-dependent business, right?
Yeah, and maybe I had something else. A couple things have changed. Automation has changed. Information systems have changed.
Definitely.
I published a report last year on project-based ERP systems, and really, those are the big guys. I get it. They can do all of this. They have business planning capabilities. They have CRM capabilities, HCM, PSA, and finance. I call it core financial man. I think 20 years ago, or I was an analyst at Aberdeen for 7 years covering this market, I would say 10% of the firms I surveyed back then had any kind of project-based ERP system. It was all best of breed. This past year, I believe we hit 50% of the firms are starting to do this. That doesn't mean you could have one of the great project-based DRCP systems, but still use another PSA solution,
Sure.
for instance, or another CRM solution, for instance. I mean, again, the big guys sometimes they use Salesforce. It just works for them, even though they've got CRM capabilities within the solution. So the automation, the information across professional services has changed in the 27 years I've been an analyst. As a matter of fact, nobody cared about, you probably remember the cobbler's children. Back, we sold technology in this market, but we didn't use technology. So that's changed. And then obviously AI hit us hard about a year and a half ago, when all of a sudden we realized how important it was going to be. And I took an AI class back at Duke back in the 80s. I've laughed about it for almost 40 years now, because it was just a buzzword for the 35 of those 40 years. All of a sudden now you start to appreciate what it can do and how it could change everything. All of the leading software vendors are building AI capabilities into their solution. They're just going to help you do your job much easier. That's really what it's all about.
Well, I mean, that's what I mean. The automation is something I have kind of been expecting professional services, because especially in the IT space, right? Because every project you do has unit testing. Every project has end user training. So the phases, there's a lot of repeatability. And in my mind, I thought they would have specialists and then automate a lot of that by using LLMs and other, repeatability technology to come up with a first draft. And then the project team can then tweak that, right?
Yeah.
Because we're seeing that in the development world. I mean, first generation, first level of code, these new tools are very, very good at. So
Oh, you're seeing it. You're seeing it, Vinny. There's no doubt about it. And in IT consulting, you're seeing a lot of these implementations be automated. The large language models have really helped these organizations. Again, the goal is to get rid of the stuff that you do time and time and time again. It doesn't change, to where you can really think and implement something innovative into your client base. So it's just starting to happen. I mean, again, I go to conferences, you go to conferences, we see these people, and it's exciting. The market is exciting.
Well, Dave, thank you so much. This is, you have a ton of really good data, and it
Thanks.
keeps evolving, and you can probably notice little tweaks that nobody else can.
Yeah, and this is how I spend my time. And Vinny, one of the beauties is the numbers change every year. So again, like that golf example, last year was last year. You better concern yourself with this year and hopefully plan a little for next year too. So it's satisfying. I've received a lot of accolades over the years about this report, and I feel like I'm helping these organizations. And I think we call it accelerate productivity and profit is what we like to say.
So this is one big deliverable. What other big deliverables do you have for your clients?
Well, yeah, last year there were three reports, and again, that's what people know me for is these reports, survey-based research, and did one on artificial intelligence in the professional services market. Again, we're the people, we need to use it just like every other market. But guess what? We're the people that companies come to for help on what is our strategy with AI. And so you're seeing a lot of these, management consultancies and IT consultancies in particular, really going out to sell these services as well as use them to be better. I mean, I think a lot of people expect project margins to go up because of AI, and we'll see. We'll see. Maybe that happened a little this year, but we'll see how it does going forward. So did a project-based ERP report talking about firms that are moving to ERP, as we like to call it, but just for services oriented firms. They've been in manufacturing forever, but not in services. So we're seeing transitions there. I'll do some surveys this year. I've got a set of partners from all over the world that are helping me. So we're 24/7 answering questions. And so I'm working with them to set the direction of the type of research that I'll do over the next year. Obviously, this report, the 19th annual benchmark will be out in about a year, and so it'll be exciting just because so much is changing right now.
Well, you are Mr. Professional Services. So thank you very much. I'm honored you came on the show.
Well, thank you, Vinny. It's always good to talk to you, and I love seeing you at these conferences.
Thanks a lot, Dave.
All right, say hi to everyone. Thank you very much.